And so it really feels like a tale of the haves and the have-nots. If you're an AI darling, you're able to reap it in. If you're not, and you're not managing to grow revenue and indeed profitability, count yourself out.
Yeah, but I mean, at some point, that's where this market should be, right? I mean, we're looking at high-risk investments, companies that should be growing fast, being able to, get their product to market and eventually exit down the line. 55,000 companies are currently VC-backed in the U.S. market. 120,000 or so globally. That's a huge number of companies that are fighting through similar trajectories, similar sectors, and fighting for that capital that's just not there anymore.
Okay, I am hearing and seeing things that the data doesn't show. For example, 24 hours ago, we had Toyota Ventures on the show. They are a single LP fund, granted, Toyota, but they raised even more money from that LP to invest in physical stuff. I'm hearing lots about funds that are being raised to invest in manufacturing, industrialization. Why is that not showing up in the data, Kyle?
Right. Well, I think first, if you start with Toyota Ventures or these corporate LPs, they have a much different return profile or ability to get these different returns than a traditional VC or traditional LP might be looking for, right? There's return on products or ability to integrate new products into their cars down the road. As a traditional LP, though, they're looking for that cash-on-cash return, and we have not seen that by any means. I mean, the last quarter, the entire story was about Reddit and Astera Labs, which were solid IPOs, but in total in the U.S., it was just $18.6 billion in exit value that was generated. And so if you're an LP without those returns and those distributions coming back to you, there's less incentive to put money back into the market now, or there's not an ability, right? They're looking for that capital to come back to recycle into new funds, new commitments, and make sure that they're in all these vintage years. But if that's not coming back, there's just no way for these traditional LPs to get or to put money back into the venture market right now.
And you say traditional LPs, and it has been fascinating to see almost the domination of corporate VC in the area of AI, certainly, compared to the venture capital arena right now. Who are a new guard of LPs that aren't corporate? Are we seeing venture capital companies managing to lure in different types of investors to secure their next funds?
When you think the investor or the LP base is going to always be wide-ranging, right? Pensions obviously are in there. You saw CalPERS re-up their commitment and increase their commitment to VC in last quarter. I mean, corporates obviously are huge. You look at the Japanese corporations, and there's trillions of dollars on their balance sheet they're able to put to work in venture into new businesses. The large mega caps in the U.S. as well, huge amounts of cash to be able to put to work, and we've seen that in some of their AI investments over the past few years. I think where it really gets down to struggling for LPs is when you look at the smaller ones, right? The high net worth individuals that maybe are feeling still very wealthy, but not nearly as what they were in 2021. You look at foundations or endowments that are finding ways to put capital to work, but maybe are not as able to take that 10 years of illiquidity that VC is going to bring to their cash. So there is still a broad range, and investors, GPs are being very strategic with who they're going after and how they're positioning their strategy and VC fund to those LPs to make sure it works for them as well.
Kyle, it's been relatively exciting recently, in the IPO market. Reddit, as an example. Is there a relationship between upstream, downstream? So when LPs and the firms that they give money to see activity in the IPO market, do they regain faith that actually putting something into a 5 or 10-year horizon is a good idea?
I mean, I think relative excitement is a really good way to position Q1, right? I mean, those two IPOs were great, but there's 720 unicorns in the market right now, or private in the U.S. Over 1,400 globally. Globally, there's a $4.8 trillion market cap on these unicorns. And so a couple of IPOs is great, but until those distributions actually get going back to LPs, again, it's going to be a slow fundraising market. It's going to be a slow deal-making market. We have, our fund distribution data is showing that distributions over the past 4 quarters have been, as low as they were in the global financial crisis. And so again, There is definitely some positives that come out of a few companies going public, but there needs to be many more. And the M&A market, again, too, where a lot of these returns are also going to get generated, is non-existent. Many of the deals we had from an M&A perspective this quarter had no deal value attached, right? So they're immaterial
Yes.
to the corporate growth. And so that's a very difficult spot when you look at returns down the road.
Hey, Carl, let's tap into your relative excitement. What are you relatively excited about thematically, subsector-wise?
Sure. Subsector-wise, I mean, obviously AI is going to be the major area going forward. I think we've seen a lot of unique companies and unique business models getting started. I think it's interesting dynamic too with the incumbents in Microsoft and AI or Microsoft and Google and Amazon being so heavy into it. I think it's going to be very quick to what we were talking about, the bifurcation and have-nots. I think there's going to be a lot of money made in AI, and there's going to be a lot of money lost. And I think it's going to be relatively quick over the next few years because of the incumbents and how they're playing in the market. Tech in general, I think is still really strong. Even though it's a slow market, like Caroline said, strong companies are getting funded. There's money out there for these companies. And so tech is going to continue pushing forward in like what we've seen. But it's going to be a difficult market, I think, for every sector down the road.